With the StockMatrix program, I'm going to do a weekend update. The actual matrix moon date isn't till Monday, but we're going to do a weekly review here real quick. This is my X account, CBOTman33 is my handle. So if you want to, I post some stuff here and trades if any. So if I don't do a video, you might want to check that out. Okay, let's go to the portfolio from the bar chart, and you can see that kind of little rebound, 44,000 up 15%. Closed position 19,000 and change. We've had 73 trades, counting the 17 that we have on. So, but again, it's just kind of following the trend. It looks like we've made a V bottom on the stocks. If it continues to grind higher, we're gonna go with it, right? I mean, that's the advantage of the system. We don't guess. Now, I might argue with the system, and typically I'm wrong. But anyway, that's why you use a system, right? That's the benefit of not using your gut or, chart art, which I call it. A lot of times you have so much overwhelming chart data that you don't know how to trade it. But this is just a simple system using our stock matrix. Let's go to that right now. Okay, let's go to NVIDIA. I'm going to do this, try this once. It's a side-by-side of my daily chart and the stock matrix chart. And you can see that, this power move from, again, that important date of the 7th, which again, May 7th on NVIDIA, was this power push up through these small highs. And a lot of gaps in here. So again, as Trump's things are getting done, it seems like the market's responding in kind. So now the 7th, 33 days over, which again, market days, not calendar, is kind of a Gann thing. That's May 22nd, and there's 66 off this high. So there's some stuff to be a little concerned about if we power push and pop new highs. If we would happen to pop highs, I would probably be a seller on my bear trap program. Using options only. Let's move on to Meta. Again, Meta is one that had a bear trap down here, which if you followed me, I did not take on my other system because I didn't have the cash. But so that makes me more interested in some type of trap up here. Now, it might not be a new high, but I'd like to see kind of a similar setup, whatever it's at, whether it's this high, this high. But you can see the opening from 2012 kind of missed the high by a couple days. The Meta's long from May 1st. So our stops will get pushed up, and the next zone on all these is May 20th. So that'll be, what day is that? May 20th is a Tuesday. So turnaround Tuesday. Again, it's out of the weekend mode. So that was, that's what's different between doing the moon thing like I do or a weekly chart. Now, when it's on the weekend, no big deal, right? It's just basically weekly chart. But now you're into the weekdays, so it becomes a little more obviously docile and different for everyone. Not much to report. I mean, beyond halfway. Looks like the journey has begun for probably a lot of these stocks. Let's go to Coke. Coca-Cola had a kind of a rebound, right? Kind of a chippy chopper pattern. This, again, bull trap up here definitely worked, and I would be another seller. I just don't think Coke is gonna. I just have a hard time believing it's gonna go vertical up here the way it's trading. I don't know the fundamentals though, so. For you that are fundamentalists, maybe there's a reason why it could go vertical. I don't see it technically. Obviously, it's a chopper. It's a safer play, but no really annuals to speak of coming up either. Again, this pattern out here is this diamond pattern. That's a big, important pattern. You go with it. If it makes a new low, you go with it. Makes a new high, you got to go with it. That's just the rule of the diamond pattern. April 7th, now the May 7th was this high. It also had timing from this, well, I guess that was a low. So yeah, I mean, it definitely caused a hammer. Buy the breaks if you're a bull. Do not buy strength. Do not sell weakness either. So that's just kind of the mantra I think you got to live by right now. Google, GOOG. Now I kind of chart some of the stuff with the GOOL because it has more history. But this low has been a little more subdued. Like I've said in the last video, do not buy the pooch because it looks cheaper. Stay away from the pooch. You gold, silver traders know what I mean. You buy silver because it looks undervalued and gold keeps making new highs. Same thing here. Don't buy the pooch. Be cautious of the sleeper because it's a sleeper for a reason. Now, again, 33 days over from the solar was this high in here. So it kind of causes this turmoil. So that is half of the matrix. 66 market days is the complete matrix. 44 will be our next sequence, what will be, at the end of the month. Microsoft's an interesting one. We made a double top on the matrix chart. Let me see if the actual chart made the daily 456.16, 456.19. Again, the bear trap. I didn't see that, or I would have traded it. Again, I want to be a seller of these on these traps, and buyers preferably on the bear traps. But that was a pukey trap. So now you can see this black line. This is the cycle from high to secondary high, and we hit that here on this high as well. So there was some stuff in there. We're on the third cycle of this count, and the next one will be the cycle of 4. Again, that's why if you ever see those and I forget to talk about it, that's what they are. This black line with a dot after it. And there's another one, May 16th. Let's take a look. Yeah, this is, I drug this one up, but it's the low, secondary low. So that cycle comes in on the 15th. So that'll be pretty important as well. Kind of a trap here as well. 456.16, 456.19. So yeah, that's one we just talked about. I guess it didn't make a new high. So that was kind of a weird one. This gap up is spooky. You know, for a company that has its own AI, these gaps are just totally uncalled for. Don't buy Microsoft AI if they can't even concentrate on their own market, for Christ's sakes. Of course, that's my bitch of the year. But anyway, we're up against these highs, so it'll be interesting to see what happens. Again, the next zone is the 20th at 12 o'clock even, which is pretty wild. Now that's start time, Greenwich time. Let's go to Amazon, and you can see the opening from 1997 was kind of in this midst. The 7th was this kind of made a low and a pretty big volume day, and then we gapped up thereafter. So 33 market days over was also this low. So we got some zones in here. 66 market days was right in here as well. That completed the matrix. Now it wasn't the low from high to low came in early, not on the actual matrix. So actually the 33, which was half the matrix, was kind of in the middle here, and the actual low came in 43. We'll call it 44 market days, part of the sequence. And then we made a high in here. It leaves a little soft taste in my mouth, a little bearish taste, and how it traded here. I don't know. That seems kind of odd to me. Again. So anyway, the sequence is done. So now you can work off the lows from here on out, and it should kind of tell the tale here, probably this next moon period. Here's Apple. Again, a pretty chipper, typical Apple, right? Everybody's so loaded up that it can't go anywhere. I think Apple's a trading market. Why? I mean, when everybody's in there, it ain't gonna have a rocket ship anymore. It'll take some pretty impressive news for that to have some big ass move. And you can see the chart here is definitely hanging a little low. We did get stopped long right at the high, and then it dropped back. Current stops are down here, so we're kind of playing the chipper game. Caught up in the Apple wash. You can see it's still pretty bearish, right? I mean, it was kind of our older bull, right? It happened at the end of the year, so our highs came in a little earlier than some of these others. So I'm kind of I don't like that, actually. It gives me a bad taste in my mouth. This gap up should at least made new highs, at least swing highs, and couldn't even do that. So something's up with Apple. I'm not an Apple client, so I bash on Apple a lot. My wife has Apple, and I hate it. I just don't like their technology. Anyway, that's just me. Samsung all the way. Tesla, kind of the same deal. Had a pretty good pop, and then there's some stupid ass gap. Really, got an island gap if you're a chart guy. So we'll see. I mean, this bear trap was on the 7th. If I forget to look at that, I mean to. So you do it if I forget. But the 7th, again, which you've noticed, I've been preaching that 7th census was confirmed. Well, this will be important. This one as well was pretty important. Kind of had an outside day up with a gap the next day to confirm the importance of the May 7th, and then up we went and into the old highs, which again were marked by the X on the 18th. So the 16th was actual low, and the 18th was over the weekend. So actually this one kind of hit and caused this gap down. So the annulars are working pretty good in Tesla. It's not a real old company though, which is probably the problem. Resistance should probably be up in here. Whoops, be up in here somewhere. The 1-to-1 coming off the highs. We are, beyond 135 days off the high, so it's getting a little long in the tooth. 180, obviously, it'll be pretty important. Let's go to Lynn. Lynn is the chopper of choppers after this magnificent bear trap that made you money fast. Now it's quiet and caught in a turmoil. This is one that we are still short. We're not short very many, but this is one of them. But you can see the stops right there. Since this goes off Tuesday, it's definitely could still go long, by Tuesday for sure. Edison, kind of an old New York electric company. I don't know if I'm going to flip these yet or not, because we had a kind of reversal period Friday on ED. This is one of the safe plays. You know, when we were up here, all the other ones are on the lows, right? The 7th, which was lows on a lot of the market. ED was on its high. Well, the 4th. So here is the 7th right here. So it missed the high by 1 day. Anyway, this was the safe play. It was going up and everything was going down. Now it's the opposite. So obviously the professionals are using ED, Procter & Gamble, a lot of these, BK, they're kind of using those as cudgels. So if they need a roll, they roll to a safer play, either direction, right? They get out, get long. They don't want to leave anything idle. Hate to leave cash sitting around. So anyway, this one, the 7th the 4th was important to this market. Let's see what the 4th was here. This was the 2nd. So could be a low, could be a high, 1 day off either direction, right? So pretty important. And keep track of the force in ED now for the next 3 or 4 months. Moving on to Adobe, the stupid gap and Marty, another gaps. Jesus. Gap up, gap up, gap down. That's stupid. It's just dumb. We got halfway back into this gap and it just puked. Looks like the timing. Let's just do a quick little look here on Adobe. This was a pretty important rally here as well. And let's see where it landed on this thing. Well, that's pretty damn close. So, missed it by a day, maybe, depending on which low you take, right? So it definitely called the time and price there on the previous one. Let's go. That one also did, right? Let's look at this one. Time, but not price. So again, these are pretty active. People are trading them, whoever's doing that. But, why a gap, though? Come on. Again, don't buy Adobe stuff for any intelligent work because they suck. Anyway, we did have a timing in here as well from 1989, an old high back from 1989, which, again, if you're 88 was the bear, right? Dropped 50% in the S&P. 89 was a bull top, so Adobe was around then and pretty active, obviously. Of course, Adobe it's a good company, but I think it's tied with some of the government contracts out there. Here's IBM. Did pop a new high, so I am going to probably look at buying puts on that Monday. Hopefully, don't gap down. I didn't catch that. I was busy with graduation, so I didn't get that one. But I definitely will be buying puts in that if I can. So anyway, because again, that's my trap program. Now, and we got to have some timing, so that's the only other thing. Let's take a look at the chart here. That is a new high by quite a bit. Now, again, it should just keep rocking and rolling, right? I mean, if this is a pause, a bullish correction, then this move should just go straight up into the atmosphere, right? It should be up in here. So again, if it doesn't do that, it's just a chopper, and it might do this for a while. Again, I think a lot of these markets are going to chop for maybe a year, get people all wound up, and then bust their bubbles. Now the markets tend to do that, right? They trade sideways 80% of the time, 10% up, 10% down. Well, at least that's the norm. So again, that just makes sense that 80% could be a chopper. And if this is, again, another one here, BK, safe play, just kind of jammed down. Now we did have timing, so it makes more sense I'll be looking at puts there for sure. But it did not make a new high here. 90.86 would be a new high on the matrix chart. So I like this. Makes sense to me to be buying puts with timing. Now, since I don't have any on yet and it's Sunday night, I will probably try to buy some cheap. Look at the out of the money options. One strike, probably 89s or something, and always go 1 month out on the monthlies. So I believe there'll be enough time there yet. Not the weeklies. I don't trade the weeklies on my bear trap, bull trap system. Let's move on. I don't want to get I'm trying to keep this short. Sorry. Here we had timing on Procter & Gamble. It was a 2011. We had a pretty good swing in 2011. It was a high. So again, Procter & Gamble is a pretty old company. Now they've been in the news a little bit. Some of their products have been hurtful to people. So, but again, if you know me, I like to trade those ones that have negative and positive news. Not just negative, but I just like ones that are in the news, right? That causes this up and down swings. That's where I make my money. I mean, you can just see it. I mean, bam, 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 up and down, up and down. So Procter & Gamble's caught in the wash. I like things like Trump and Elon. I like those controversy things. They tend to make me money. Again, I don't care either direction, right? I'm a bull or a bear. I'm not one-sided at all. Let's move on. JPM, the diamond, up here, getting kind of a nosebleed section. If you're building a house, the construction of your house needs a good foundation. There is no foundation here. So this sucks ass. So again, if it's going to break, it'll break all the way back. Could see a new low. I mean, that's just my nature of the beast. 66 market days over is right in here on the 27th. 19th was the high. So between the 19th and 27th, be awfully careful of this market. If it's still up here in the nosebleed section, it might be worthy of buying a put or something. Now again, I won't do it on my program unless we have a new high. Now it could do that. This chart, up against the 1-to-1 off the lows. So let's take a look. Yeah, off these lows. So now this other one is off these secondary point. So anyway, you can see that that's an important trend line. That's a 1-to-1. That's 1 square of 9 up and 1 quarter moon over, right? So it's a 1-to-1 of the quarter moons using the square of 9. So anyway, we do square this out here in the summer, July 2nd, that range. Now, if we make a new high, that doesn't count, right? So just so you're aware. Let's move on. Oops. Coinbase, again, nice bottom. The reaction is okay. I mean, I thought it should have been much faster. It does not have any construction, so that concerns me a lot. That we're just kind of there. Let me see. But yeah, it's a corrective move as we can tell. But these markets are sure acting like they want to take off. They got that feel again, which is the normal, right? Now I hate that because my instincts are saying don't be normal. Every break ends up with a bull, right? Well, come on. Every break, really? I come from the commodity world, so our bear markets in the commodities will last freaking 20 years, 10 years. We don't have a bear market that lasts more than a year in the stocks, so I come from a different world. But again, that's why the system don't care about any of that shit. It don't care what I think. It don't care. The StockMatrix program don't care about Trump. It don't care about war. It don't care about droughts. It don't care about the Middle East. It don't care about anything. So the system just is a system. It's a living, breathing thing. So anyway, Cintas here. I've been kind of preaching about that. I think that's been a bull of the bulls. That quick 20% after the power grab from the stock split was a wake-up call, and this activity makes a lot of sense. Don't buy strength on Cintas. You buy, even if you make new highs, I think I would still be a seller for a bit. All right, I'm going to cut off. I know that's pretty short. Didn't go through the whole gamut. I might do another one, though, on Tuesday. We'll see if I'm back from my graduation. All right, thank you. Everybody have a great rest of your trading week.